the Dow. S&P pitching in with 15 points, and the NASDAQ up 52. For more on the markets, let's bring in Sarah Malik, Chief Investment Officer and Head of Equities as well as Fixed Income at Nuveen. I think at Nuveen, a lot of times I think more of fixed income. What do you want to start with today? Sarah, you extending location or duration with bonds. Is it attractive right now, do you think, if we're in a kind of an easing cycle with the Fed?
I think Fed cutting rates is positive for fixed income. Yields are very attractive here. We're focusing on credit over duration, though, and particularly like municipal bonds because of the strong fundamentals. States have very strong rainy day funds and also high savings rates. So that's the sweet spot of fixed income for us. Secondarily, we also like senior loans and emerging market debt now that some of the Liberation Day issues are behind us.
So tell me what you mean by that. I mean, you want higher credit, or you're ready to step out and you think things are fine and you think BBB plus, if that's still a rating. It's been a while, but would you go that way, or would you go more quality?
We go higher quality credit. So areas like senior loans, if you look at 8 of the past 9 rate cut cycles, senior loans actually performed very strongly. And we like areas with strong fundamentals, that's municipal bonds. So definitely looking on the quality side of credit, but then taking a little more risk in the emerging markets where that area was weak earlier this year because of Liberation Day and tariffs. And now tariffs, of course, are not behind us, but the markets have settled somewhat now that we have more information on tariffs and clarity in terms of where they're going to land.
Are you worried about the economy, and that's why you're going up in quality?
Well, definitely the employment markets are showing that the economy is starting to slow a little bit, but the 3 areas that we're focused on right now in terms of where we're investing is the government shutdown, also the pace of Fed rate cuts, and third quarter earnings. First looking at the government shutdown, I think usually that's not a huge impact on the markets, but the tail risks here are if furloughed jobs become eliminated jobs, that could have an impact on the job market. And also, because we're not able to get economic data like payrolls today, and we may not get inflation data, the Fed is going to be flying blind a little bit when it looks at rate cuts. So as you know, we have an FOMC meeting coming up later this month, October 28th, and the Fed may not have enough information to decide if they need to cut rates by 25 basis points. And then finally, on the bright side, third quarter earnings, I think, will come in strong. Year-over-year consensus is for 8.8% growth. I think that we can beat that, and it'll be led by tech stocks. They account for about 3/4 of earnings growth coming into the fourth quarter, into the third and fourth quarters, and I think tech will lead the way continuing from here.
So you don't ascribe necessarily to all the articles we've seen written about valuation. Valuation doesn't necessarily mean we're headed lower, but it's not cheap, is it, the market?
U.S. markets are definitely not cheap. They're trading at a premium versus history. But the reason for the premium on the U.S. markets and what the U.S. trade is really tech and AI. And I'm curious, Joe, did ChatGPT get back to you in terms of whether it is the poster child for the bubble or not?
Order filled.
Still thinking that one through.
I mean, it did give me an answer.
Order submitted.
From Perplexity, it's probably wrong. I'm kidding. He's going to be on later today. They need to tighten up those algos or something. I'm still worried about Gigo. It seems like they scrape a bunch of crap and half of it's wrong. So we're missing the step where it does something like Andrew Ross Sorkin is able to do. High-level analysis and intelligence to collate and aggregate all these disparate facts but come up with something insightful. Does it do that? Have you found anything that does that anywhere?
No, you have to come up with it. But if you come up with the idea,
no, I'm not going to be able to do that.
It will then actually connect dots for you, meaning it can go out and try to find the things that would support.
But it'll get better, right, Andrew? We need more data centers.
Right? Is that the problem?
More energy. We need more data centers. We need more.
But would it find things that may or may not, it would support it that may or may not be right?
I found actually, I mean, I think ChatGPT, as I've said, and I think Gemini increasingly has gotten better to the point where, for the most part, the kind of things that they would, the kind of supporting material that they would create. Again, one of the things you have to be very cognizant of is asking it to provide links, which I think everyone,
you can double check.
I think everybody would want to check. And also, you can actually tell it, do not give me anything unless you've double checked it. Meaning, if you actually treat the thing, yes, if you treat the thing like a person, where by the way, you may not trust a person to actually get it right, but if you say, look, only bring me facts that you've double-checked, it will actually double-check them. And by the way, if you talk to it like that, I mean, it's sort of a very strange thing.
There's a meaning to it.
Yeah.
It will actually do it.
It's early.
But if you ask some intern to go get you the facts, they're going to have messed up facts too, is the truth. And so, but if you say to the intern, do not bring me anything that could possibly be wrong, this thing will actually do that. That it will do. But it actually has to do with...
Why don't they put that into the algorithm?
Sarah, I think...
how you prompt it.
Sarah, I think you kind of brought this. You brought it up and said, did it get back to me yet? And then we went off on this. You got any final thoughts? Because I think we ate into some of your time, and I apologize for that. But it is Friday, so we're probably all pretty happy. But so you figure stay the course in stocks and bonds.
Yeah, stay the course. I think that speaking of AI, this time is different versus the late 90s. I was a small cap growth investor in the late 90s. I remember that bubble. The companies this time are different. They're larger, they're profitable, and the users of AI, which is corporations, are putting that into their workforce right now. It's increasing productivity, increasing revenues over time. I think the issue would be if we hit an air pocket, because we are wondering, is there ROI on all this billions of dollars spent on AI going to make sure that we realize that in a timely manner? But while there could be an air pocket, the structural trend of artificial intelligence is alive and well and here to stay, and that will drive U.S. stocks higher. Actually, if you look at the S&P year to date, when it's up this much, which is about almost the mid-teens at this point, usually markets end higher by the time the year ends.
Okay. Thank you, Sarah.
Good to see you.
Okay, good to see you.
Okay, still to come, a shopping app powered by artificial intelligence that compares prices in the resale market. We are talking about Phidias, which was launched in April by Phoebe Gates and Sophia Gianni, who are also the co-hosts of the Burnouts podcast, and they're going to join us next. You don't want to miss it. And then later, with the government shutdown and no jobs report today, we've come up with our own view of the labor market. We're going to share some of those numbers and get some broader views of where the jobs are, where they're headed. It's the closest thing you're going to get to the employment report today. Squawk Box coming right back.
Time now for today's Aflac trivia question. In 2009, Kodak discontinued what popular easy-to-use color slide film? The answer when Squawk Box returns.
Brian, it's me. I mean you. Wake up. Come on, man. You got to tell employers to take another look at all the benefits they're offering. Everybody wants to build the best team, and offering Aflac can help attract and retain that top talent. You know we like that top talent. And listen, I mean, you got to listen. Aflac gives employees cash to help with unexpected medical bills. It's prime time to add Aflac.
Request a call today at aflac.com/prime.
Welcome to the Now Way to Network. They switched to Juniper's AI native network. Now everyone's so productive, they're operating at a higher gear. Now their network is self-configuring, self-detecting, and self-healing. So their IT team deals with up to 90% fewer network trouble tickets.
Whoa, what was that?
Just the sound barrier. That's the Now Way to Network at work, with real AI, putting you in the fast lane.
At Corient, wealth management begins and ends with you. We believe the more personal the solution, the more powerful the result. We treat your goals as our own. We never lose focus on the life you want to build. And our experienced advisors design custom-built strategies to help you get there. It's time for a wealth management experience as sophisticated as you are. It's time for Corient.
Oh, hi. Work here. Yeah, I get it. I've been a lot. And I know our relationship hasn't been working for a while now. I am trying, but I know I've got some boundary issues. Ugh, why am I so clingy? But after a lot of soul searching, some light journaling, and one very intense group processing circle, I got some help from UKG. I found understanding and HR pay and workforce tools. Now I'm ready to plan for our future. Trying new things together. I'll even give you space when you need it. Because, can I be honest? I want to take things to the next level. Oh, and I've got some new friends. Well, AI agents, but they're such a solid crew. You'll love them. Look at us. It just feels right.
I grew up in Centerville, Ohio. Midwest is best. When I think about ambition, I think about risk-taking. TV was a huge risk for me. I love covering retail. Consumer spending makes up 70% of GDP. I've always been so proud to be a part of CNBC.
And now the answer to today's Aflac trivia question. In 2009, Kodak discontinued what popular, easy-to-use color slide film? The answer? Kodachrome. After a 74-year run, the last rolls were developed in Parsons, Kansas in 2010.
Welcome back to Squawk Box. Our next guests are the co-founders of the digital shopping platform Phidias. The startup recently announced it has raised now $8 million in seed funding. It is backed by investors that include venture capital firm Kleiner Perkins now, and celebrities and entrepreneurs including Hailey Bieber, Kris Jenner, Sarah Blakely among them. Joining us right now in their first broadcast interview since that round is Phidias co-founders and co-hosts of the Burnout podcast, or the Burnouts podcast, I should say, with an S. Phoebe Gates and Sophia Kian. Good morning to both of you.
Thank you for having us.
We had you on when this was all sort of the first, I think, close to the first moment of financing. What's happening now, and what are you doing with all this money?
Yeah, when we first came on, it was 3 a.m. in California, and we had just launched the company. So since then, it's been 5 months. We crossed 550,000 downloads, and our biggest focus really has been on hiring. So we right now have a small, lean, mean team of 12 people, mostly engineers and ex-founders. So we want to continue to scale the team as the product continues to grow.
So what is the next sort of big investment technologically? All of these engineers, what do you have to do to the app?
The biggest thing that we rolled out this month is our in-house patented search, which has really improved the latency, finding you better deals within under 2 seconds now, which we're really excited about. And really the next wave is taking all of this search data and all that we're learning from our users to start to personalize their results and move towards a discovery feed for each and every user.
Okay, what does the fashion industry think of this?
Well, we work with both secondhand partners and also retail partners. Our primary goal right now is to be a consumer-first company. And so the fact that we have tens of thousands of users transacting and we've driven millions of dollars of GMV is very exciting to us, and it proves that we are really solving a pain point for our consumers. And we also have a ton of access to basically like trends and brand data, and that's something that we're also leveraging to be able to co-create with people in the fashion industry.
Have you been using it yet, Becky, quick?
I have not.
We got to get you on this.
This is something that I should be using, and I know my daughters are kind of into it too because they're into fashion.
And I'll say we have a number of incredible partners who give us, for our users, access to unique deals on their products. We're able to serve back those products within our users' editorials, whether that's Veronica Beard, Neiman Marcus, Reformation. We work with partners across the gamut. So generally, we think we've been really, the fashion industry has really welcomed this and been excited about it.
Well, the reason I asked is, I assume that there's got to be some players in the fashion industry that they don't want things to be discounted. They don't want things, right? I mean, isn't that, they have like a brand halo themselves, and they don't want anybody encroaching on that.
I mean, from what we've seen from the brand partners that we've talked to, some of the biggest issues really are with retargeting, return rates, cart abandonment, and these are all issues that we work on solving with our brand partners. And so obviously, right now, we are a consumer-first platform, and we are focused on making sure our users are happy, and there's also a way to do that while making brands happy, too. And so we are constantly evolving in our ecosystem to see what we can do.
What's the hottest selling item right now?
Aloha's sneakers.
Aloha sneakers. I don't even think I know what... I don't think I know what Aloha sneakers are. You don't have Aloha sneakers on.
No.
What are Aloha sneakers?
They're a big trending sneaker right now. Another one is Park. The brand is really up right now. You should have seen the sales of Rode after they announced their sale. Yeah. It is so interesting to watch all the trends and what our users are buying. So the other thing that you guys do, which I watch online, is this podcast, which is blown up in this remarkable way. How much do you think that every business is now going to have a podcast or almost their own TV show, which is sort of what this has turned into? As, I don't know if it's a marketing device, I don't know I'm curious how you think about that relative
to this business you've created?
I think that community building is so, so important. As we see access to different tech become more and more democratized to people who are building companies, I think the key things that matter are, can you provide a novel user experience? For us, that's using what we know about our users to move towards personalization, providing them novel deals in one click. And then the other thing is having a brand and distribution. People are so sick of buying labels. You can't compete as an early stage startup, even after raising a round with these large advertisement budgets. And so for us, the biggest way that we found, that helps to acquire users is really us putting our face out there, creating content that provides value to the community. So bringing on guests who can kind of open the closed door on advice they've had in business, failures that they've had, and then bringing the community in has really driven a lot of downloads for us. So I 100% thinking having a brand is going to be a key advantage for startups.
Okay, so here's a question we were talking about a little bit off camera before. In terms of the different social media platforms that are leading you and driving folks to the app to download and then to buy, is it Instagram? Is it TikTok? Is it what you're doing on YouTube?
Order canceled.
How do you think about that? And are you spending money on those platforms yourself?
Order
submitted.
submitted.
So I would break it down as probably like Instagram, TikTok, and then YouTube, especially YouTube Shorts, and then actually LinkedIn and Substack. So we've actually invested heavily in other platforms that we think are up and coming, especially where there's a lot of like pre-professional women who tend to be interested in FIA. So we've really diversified across all platforms.
Okay, and now since I do follow you, are you ever going to get into men's stuff?
Absolutely. You can take our style quiz and it repersonalizes the entire app with deals for men. We have male editorials.
Do you?
We do.
With that said, 88% of our user base is women. So we're
okay. So I did not even know that. Now I apologize. I didn't even realize that you have stuff for me. What do you have?
We do.
You're
Joe?
just like a creeper looking at all the women's wear?
No, no. It's just comes up. After they came on the air, I followed them on Instagram.
Can I buy Aloha?
You can absolutely buy Aloha sneakers. We'll get you some Aloha sneakers on FIA.com.
Because he's a sneaker aficionado.
I think of myself as a sneakerhead, and so the fact that I don't know about this Aloha
situation. What are you wearing right now? What sneakers are these?
These are Xenia sneakers.
I am sure we can find
maybe
your
we'll have
Xenia
you do an
sneakers.
edit in the FIA app. We could drop it.
Okay.
Your Xenia edit.
How many
pairs
of sneakers, not total pairs, don't count them separate, but how many pairs of sneakers do you have? Do you have 30 pairs?
Probably.
You do?
Yeah. I have a lot of sneakers. Too many sneakers.
It's amazing.
I'd say for us, the interesting thing is, honestly, we've been really laser focused on this target consumer, which, like ourselves, I mean, we ran as roommates in college, are women who are obsessed with shopping. And I think a lot of the time, the economic opportunity around this consumer has been completely ignored. And today, brands, are putting out, products to users consistently, and they're overwhelmed with what should I actually buy. And so I think there's a huge opportunity to serve this user. Women shop smartly. We are just making it easier to consolidate the flow that they already do into one click, whether that's now seeing sizing, starting to see sizing insights, reviews, return status, shipping, or other deals.
Is it, if you were to look at the geographical sort of setup of where these women are, is it mostly big cities, or is it in places that you wouldn't think about yet?
Yeah, so the majority of our user base is, of course, in the United States, and then it's heavily concentrated in urban areas. So you can think like New York City, LA, Chicago, et cetera.
Okay. Dream guest on the Burnouts.
Amal Clooney would be incredible to have on.
Okay. Amal, if you're watching, thank you, guys. Appreciate it.
Thank you.
Great to see
Thank you so
Appreciate
much.
It. Thanks.
All right, when we come back, the Squawk Box Jobs Report. We're going to put our own jobs report together if we can't get one from the government, including a check on how small business is feeling about the economy and hiring right now. And then shares of Rumble spiking on news of a partnership with Perplexity. Perplexity CEO will join us to talk about that and much more. It's all coming up in just a little bit. Squawk Box, we'll be right back.
Do you care where the economy is headed? What about elections? Or climate change? See the forecast consensus on our future at IBKR Forecast Trader. If you disagree, you can buy the contract that looks undervalued. But be careful. You must be right more than 50.5% of the time to win. Go to IBKR Forecast Trader.
Hi, I'm Jay Jackson. For almost 20 years, Abacus Life has been purchasing life insurance policies from seniors. And in just seconds, you can use the free calculator at abacuspays.com to learn what your policy might be worth.
The premiums were getting unreasonable.
We just didn't need the coverage anymore.
Don't sell or lapse your policy without going to abacuspays.com first. There are no fees and no obligations. Get the real value from your life insurance when you need it with Abacus.
Tamara, Izzy, and Emma. They respond to emails with phone calls. And they don't circle back. They're already there. They wear business sneakers and pad their keyboards with something that makes their clickety-clacking clickety-clackier. But no one loves logistics as much as they do. You need Tamara, Izzy, and Emma. They need a retirement plan. Work with Principal so we can help you with a retirement and benefits plan that's right for your team. Let our expertise round out yours.
Welcome to CNBC's Crypto World.
CNBC's daily digital show has trading updates, the latest headlines, a global perspective, and high-profile interviews. Scan to watch CNBC's Crypto World, sponsored by Crypto.com.
Welcome back to what should be a thrilling second half. Welcome back to what should be a thrilling second half.
Hockey is here. The breakaways, here. The Ovi goals, here. The Stanley Cup, yeah, you guessed it. It's here on ESPN.
Introducing SportsCenter for you, personalized every single day. Now available on the ESPN app. Powered by your favorites.
Okay. Coming up, talking about using different AI things, but coming up with No Jobs Data today, we've put together a panel, anyway, to help you navigate the labor market and what we know. With the recent jobs numbers, do we really know that much less? Am I not getting these? I don't really. Plus, Heyman Capital's Kyle Bass on the Defense Department's shift to give startups some contracts. And then the CEO of Perplexity is going to join us. Squawk Box, coming right back.
Oh, so you corporate types think you're rock stars?
That's as ridiculous as us, being corporate types. Let's begin.
Rockstar move using Workday to handle all our AI agents.
Well, watch me handle my agent, Gary. Bubbly water, no bubbles.
So what'd you do this weekend?
The usual.
Shout out to Carmen for using Workday to manage our people and AI agents.
What are we doing?
Just clap.
Carmen!
Every morning, even before the markets open, I'm planning my moves that I make throughout the day. When you're actively trading, the fees really start to add up, and that eats directly into your potential returns. I found that Public is really the only platform that offers rebates on your option trades, which help offset those costs. For me, when it comes to investing, timing is everything, and Public allows me to get a step ahead.
Time is your most important asset, and AI is transforming the speed of business. Your innovation and how you protect it depends on the technology you choose to trust. 70% of the Fortune 100 trust CrowdStrike's leading AI-native cybersecurity platform, built to secure their business and the AI fueling their innovation. AI is changing the world. We're securing it. CrowdStrike. We stop breaches.
What if you could invest in a future where skin cancer treatment is non-invasive and relatively painless? Medicus Pharma's groundbreaking solution delivers chemotherapy directly to the tumor site, offering a mostly painless alternative to invasive surgeries. With the skin cancer treatment market expected to exceed $20 billion by 2030, Medicus is poised to meet the demand for cost-effective, non-surgical options, now advancing Phase 2 studies. Medicus Pharma, leading the charge in skin cancer innovation.
Level up your credit card game with the new Crypto.com Visa Signature Credit Card. Spend in dollars and earn in crypto. Earn up to 6% back on all purchases. Choose from 7 attractive colors in sleek metal finish. And the best part? Uncapped crypto rewards. This is our boldest offer yet. Apply for the Crypto.com Visa Signature Credit Card today.
Why'd you run with us for a while?
It's a wild animal.
Which room's open?
You don't know what's coming.
We're in this together. New Chicago Wednesday on NBC and Peacock.
Well, as you know by now, there is no official jobs report today because of the government shutdown. But we found another way to try and get a look at employment in the month of September. We're going to call this our own Squawk survey. Evan Sohn is the CEO of Aura Intelligence. That's a platform for workforce analytics. Bill Dunkelberg is the chief economist at the National Federation of Independent Businesses. Both have real data on the state of jobs in this country. And of course, we have our very own senior economics reporter, Steve Leisman, who has been digging into this problem for quite some time. So let's kick things off. And Steve, maybe why don't you give us an overview of how you've been looking around for these numbers for a while?
Nothing replaces the jobs report over time. But there are things out there that are pretty decent in terms of giving us a decent look at where things are going and the general state of the job market. That said, I believe Mr. Sohn has some different points of view, and Bill does. Can I start with Bill here? I think that's maybe the best way to go. Bill, we quoted one of our favorite economists here the other day, Ian Shepherdson, who said that nothing does better in terms of telling us where the job market is going 3 to 4 months ahead of time than NFIB hiring intentions. And we have a chart on that. Can you tell us what you're seeing when you look at what's happening with NFIB hiring intentions, small business, and why should this give us a bead on what's happening nationally?
Sure. Well, the answer is nothing really exciting. That's the problem. We ask each month a whole bunch of firms about the change in their total employment, and that gives us some idea of what the overall impact of hiring and firing is, and then ask about actual plans. And right now we see that there are a lot of firms that have job openings. There are, unfortunately, very few that get filled. So plans to fill them are always very optimistic, but when the dust clears, very few jobs actually get created. So that leaves us with a negative number for the net increase in employment for the small businesses that we survey.
But we don't see it falling off a cliff. Evan, just to spare the viewers, I didn't lead with calamity, Evan. So I just want to get your point of view here. You see the job market grinding to a halt, according to your latest work. Give us your the background and the detail on that conclusion.
First of all, Steve, good to see you, and happy anniversary to the Squawk Box.
Thanks.
Thank you.
We've been tracking, and we track job posting data and by industry on a week-by-week basis. And we started to see really a real decline across all sectors with a couple of spots of surging. So healthcare, which has always been just a bellwether for of this economy, where 1 out of every 8 people in the U.S. is employed in healthcare, is actually down pretty significantly this year. Restaurants, which is really a really good leading indicator of consumer spend, is down pretty drastically in September. So that's really that really makes it pretty looming. Software, internet, computer software, all down. AI roles still maintaining about 12.5% of those roles. So we really saw a pretty gloomy September. 2 exceptions. We saw September ending well on a week-by-week basis. Retail was up just a slight bit, like 2%, and then higher education was up.
Bill, I want to just work with me for a second. I have this idea in my head of a conversation that may happen at a small business. Jim says to Martha, "Martha, did you call Indonesia to see if they have a cheaper price than the thing we were getting from Vietnam?" And Martha says to Jim, "Did you call the Commerce Department to see if the tariff is lower there?" And Jim says, "No, I was on the phone with the accountant about what's happening with the depreciation schedule." And Martha says, "The guy from Indonesia wants a rider on the depreciation of the dollar." And then Martha says to Jim, "Jim, you're going to hire that guy?" And Jim says, "Well, let's wait a minute till all this other stuff clears out." Are you hearing, Bill, from your constituents and your survey respondents, it's not negative. It's just uncertainty puts them on hold. Is there a hold going on because of some of the uncertainty and the changing stuff, some of which is good and some of which is bad? That's for Bill.
Sorry about that. Well, I think the uncertainty is about the economy. We have an uncertainty index that is at one of the highest levels that it's attained in the last 50 years. So there's a huge amount of uncertainty, and hiring is an investment, and we're not sure that we want to make those commitments. But the overall picture still is that virtually 90% of the firms that hire or tried to hire say there are few or no qualified applicants for the positions that they have. And, we're not real high tech most of the time, so one wonders what's going on.
Order filled.
Hey, Evan, we have tried to figure out the two sides of this economy. When it comes to technology, there's massive spending that's taking place, massive CapEx spending. When it comes to the consumer side, we may have more questions about it, but you think that what's been taking place on the tech side is actually masking the weakness that we're seeing in other areas, to the point that, and that's maybe why we haven't had bigger alarms going off about what's happening in the jobs market to this point?
Order filled.
That's right. When you're seeing hiring going on in computer software, you might think that that's really good, but if a lot of those roles are AI roles, they're really coming to replace other people. And that's really what we're seeing. We have a partnership with a company called Revelio Labs, and in response to the BLS numbers of a couple of months ago, in the revisions, they started creating their own public labor statistics report. And they showed the same thing that we showed that we're saying for this past month, that there was an increase, a slight increase, both on the retail side and on the higher education and health side. But we're all seeing a real decline across multiple sectors.
Evan, I want to just get to how all this should or should not be affecting the Federal Reserve. If you look at one thing I keep an eye on is the October Fed funds futures a year from now. Where do they think the Fed funds are going to be? And it's down quite a bit and down sharply as a result, you can see, from the ADP report, which came in negative 32,000. But if you look at the Fed funds outlook, you can see for the next couple months, they've got 25 built in, 25 built in. Do you think that the absence of the jobs report will mean the Fed could fall behind the curve or further behind the curve than it otherwise might be in terms of cutting interest rates to help the job market?
Yeah, absolutely, Steve. We're looking at September. Last September, the U.S. created 225,000 jobs, but that was pre the revision of the whole year of another 800,000 jobs. I think when the Fed is listening to the BLS numbers, they're getting in late. I think had the numbers been accurate back in June, we would have seen a rate cut in June or July that would have impacted Q4. And we think, just anecdotally, that given it's already Q4, fewer people are looking to quit. And when fewer people are quitting, and you look at the JOLT numbers, fewer people are quitting now. It's hard to find those candidates. As the NFIB just reported, it's harder to find those candidates because fewer people are quitting. I think had the Fed adjusted those rates in June or July, we would have seen a better response for Q4 hiring. I think now companies are waiting really for 26.
You know what, Becky?
What's that?
We can ask somebody from the Fed about this in just a little bit.
Oh,
Did you know that?
Awesome. Yeah. I was going to get your number and Santelli's number.
And combine them. Come to the
combine
average.
them, divided by 2, and distribute.
Were you going to equal weight average them, or were you going to give a certain...
I was going to give Santelli's more weight.
Yeah, that's what I probably thought.
Order filled.
3/5.
Yeah.
Steve, thank you. We're going to see you in just
Order
a little bit.
submitted.
Evan and Bill, thank you for joining us this morning.
Thanks so much.
Okay, coming up, travel disruptions as in Europe as drone sightings continue to grow. We're going to bring you details on that. It's a fascinating story. And then tech stocks driving markets higher. Here's a look at some of the biggest names making moves right now. Tesla up over 80% in a year. NVIDIA up 50%. Apple up 15%. Sitting close to a new all-time high. We're going to talk about these names and so much more in just a moment when we come back.
This CNBC program is sponsored by Baird. Visit BairdDifference.com.
At IHG Hotels and Resorts, you can simply arrive or make an entrance. Stick to the agenda or experience something unexpected. With IHG's 20 hotel brands, you can guest how you guest.
In a world of conformity, it's often the innovative that stand out. At FlexJet, we've built a state-of-the-art operations control center with an international fleet of private jets and helicopters. Our Red Label crews are leading the way in pilot compensation, all supported by one of the world's largest maintenance networks. This is our timeless dedication to you. That's why we're outgrowing the competition 2-1. At FlexJet, you won't just be flown, you'll be moved.
When cyber threats target the world's data, seconds matter. That's why the world's most trusted brands depend on ReliaQuest Gray Matter to contain threats in seconds. It's the only technology-independent AI-driven platform built by security operators for security operators. ReliaQuest. Make security possible.
Gold delivers when markets don't. G Mining Ventures operates Brazil's newest producing gold mine with proven reserves and cash flow. Now they've expanded to Guyana to repeat their success. G Mining Ventures, creating value through responsible mining.
Here's up, Coach. Media's here. Watch me work, baby.
I'm sure they're here to see the commissioner of coverage.
Excuse me, Commissioner. When health insurance doesn't cover everything, what's the move?
What the commissioner means is that Aflac gives you cash to help with all those medical bills.
We think you're amazing.
They came to see you, huh? Get help with expenses health insurance doesn't cover with Aflac.
How do we get Aflac?
Man, they gotta ask about it at work.
They are.
Right now at the Rooms to Go Fall Mattress Sale, save big thanks to this very special mattress offer. Get a king-size mattress for the price of a queen mattress, starting at just $597. Choose from 3 great brands: Therapeutic, Beauty Rest, and Sealy Posturepedic. That's a king mattress for the price of a queen, starting at $597. Plus, check out our other great mattress buys, now at the Rooms to Go Fall Mattress Sale. Don't miss it.
Order filled.
Order filled.
Order submitted.
White House Budget Director Russell Vought just posting on X $2.1 billion in Chicago infrastructure projects, specifically the Red Line extension and the Red and Purple modernization project have been put on hold to ensure that funding is not flowing via race-based contracting. Earlier this week, Vought said that the Trump administration was also putting on hold billions of dollars in funding for infrastructure projects in New York City. And there's a lot of the mass transit in Chicago is going to be busy with people going to Cubs games after that umpire made that beautiful strike call. I think we need AI umpires at this point. That can make a huge difference in a game. That can make a huge difference. It can just cut off.
Well, look, what we were discussing off air before is because there's now so much money going into gambling around sports, the pressure is that much higher. The questions about
you mean it raises an eyebrow? You mean?
Yeah.
I think they're just incompetent.
Well, we've always had issues because it's impossible for a human to do this on a split second all the time and do it perfectly. But because there's so much money in sports now, the integrity of the game can be questioned, and I think they probably need better answers to help around that as a result. All right, when we come back, a look at what's moving in the pre-market. Plus, Haven Capital's Kyle Bass will join us. Right now, though, as we head to a break, let's take a look at Bitcoin this morning. It's above 120,000. It's down by about $350. Squawk Box will be right back.
AI stocks are still soaring, but if you're watching NVIDIA, Microsoft, or Tesla, you're looking in the wrong place. My name is Mark Chaikin. I spent decades on Wall Street building one of the most widely used trading indicators in the world. Today, my mission is bringing the market's biggest stories to regular people while they're still flying under Wall Street's radar, using a stock rating system that's issued bullish ratings in our backtest for 44 of the top 50 stocks of the year, 2 years running. In fact, my system flashed bullish on all of the Magnificent 7 AI stocks before their massive run helped mint 600,000 new American millionaires. But that was then, and this is now. Looking ahead, I believe the biggest potential gains will not come from the Magnificent 7. My system is now pointing to lesser-known companies, stocks you will likely scroll right past. That's why I just recorded a brand new presentation revealing what's really happening right now beneath the hood of the stock market. It's a story I haven't seen reported anywhere else. My #1 stock to buy today, along with a popular AI stock I urge you to avoid or sell immediately. Visit my website below for all the details, including a free recommendation that's flashing bullish in my system.
Silver is at a 10-year high. Kootenai Silver boasts one of the largest resources owned by a junior company. With the new high-grade discovery in Mexico, the potential for growth and leverage to silver is significant. Kootenai Silver.
At Public, the high-yield cash account's a no-brainer. I know my money's working hard for me, and I know I can access it anytime I need it. It's very simple. Better rates mean faster growth, and that's exactly what I need.
I never thought this would happen.
When disaster takes control of your life,
We got you.
get it back with a single call to the team that shows up fast to make things right. ServPro, like it never even happened.
Introducing CNBC Plus.
You can stream Squawk Box.
Stream Squawk on the Street.
If you can't catch Fast Money in real time, watch us later on CNBC Plus.
Look at that. Kind of good.
Start streaming at cnbc.com/plus.
Well, as you know, tech stocks are driving the AI trade as mega cap companies fuel market momentum. Joining us right now is Doug Clinton. He is the founder and CEO of Intelligent Alpha. And Doug, the higher we go, the more people start looking for signs of whether this is a bubble, whether it's likely to burst. You are not in that camp. You think there's a long runway still to go. Why don't you lay out your thesis as to why you think that?
Becky, I still think there's 2 to 4 years probably to go in this AI. We'll call it a bull market before we get to the bubble word. There is a lot, I think, of sentiment now, people thinking it's a bubble. I think that the NVIDIA OpenAI deal from the other week, $100 billion investment, I feel like that was almost like the straw that broke the camel's back for a lot of people who said, this is a huge investment. You know, they're investing in one of their biggest customers. How can this not be... Exactly. How could this not be the end? And I think the reality is it might actually still be closer to the beginning, because what we're seeing is huge demand for these services. OpenAI, Google, both of them have mentioned that they are capacity constrained still. Customers want this product, and the models keep getting better. And for me, as a person who's building a company on this technology, I see the value, right? People question, when are we going to see hundreds of billions of dollars in return? But I already see how it is creating value at Intelligent Alpha. I think other companies are going to find the same thing, and it will support hundreds of billions of dollars in revenue for OpenAI.
Look, I was at my doctor's office this week, and he showed me how it works, where all he needs to do is bring in his phone, it records the entire conversation, translates it into notes, so they don't have to do any of that stupid work that nobody likes to do. And that's amazing, but the question still is, who's going to pay for it? Like, when and how do we start seeing, if it's not going to be vendor financed, when and how do we start seeing other people stepping up, other companies stepping up and paying for it?
I think, so 2 points to that. I think one is when we debate this sort of circular economy with OpenAI and NVIDIA, ultimately, that's all that matters, because if OpenAI can't generate revenue to ultimately support these longer-term investments, it doesn't matter that we've got circular, not circular, it's irrelevant. I still think they'll be able to do that. But in terms of who will pay, if you think about just the personal assistant market a little bit right now, you mentioned healthcare, right? I think most doctors are probably willing to pay $50, $100, maybe even several $100s per month for software like that, because they can replace someone who they're probably paying much more than that to do that work right now. And that's what I think we're going to continue to see over time, is this slow adoption of people seeing the value for replacing human labor for $50 to $100 a month. If you kind of do the math, there's several hundred people, I think, in the US and in Europe alone that might be willing to pay $1,000 or more per year for a personal assistant type software. And that can get you to $1 trillion in revenue and subscription revenue over the longer run.
Let's talk about the concentration in the major averages now. I think it's like 40% of the S&P is the top 10 companies. That's the most it's ever been. Does that concern you? Does it worry you?
It does on the surface, but when you put it into context, I actually think it's not that bad. And so if you look at that 40%, the top 10 companies, 30% of the earnings of the index come from those top 40% companies.
Top 10% of companies.
The top 10 companies, 40% of the index.
Yeah.
And so when you look at that ratio, those companies are the best companies in the world. They should trade at a premium to the rest of the market, and that's what that delta represents. If you go back to the dot-com era, the top 10 companies were about 30% of the index, only about 15% of the earnings, and so you had a much higher premium paid there than you do today.
I guess my question is, now versus what we saw in the 1990s, there are so much more money that's indexed, so many more people that follow the indexes. They may not even realize how heavy their concentration is in these 10 stocks. Are they in for a rude awakening when and if those stocks have a comeuppance?
They could be, but I think when you look at what companies are actually in that top 10, and I'll tie it to the portfolio that we run at Intelligent Alpha, we still believe a good place to be is in the mega cap tech stocks. Despite the concentration, despite the concerns about the bubble, our top 3 mega cap positions are NVIDIA, Microsoft, and TSM.
Okay.
And I think you want to continue to own those companies into this AI bull market cycle, because they will have upside to revenue and earnings. And I think they'll continue to benefit from investor excitement. Even if things get a little scary from a valuation standpoint, people are still going to want that exposure.
Doug Clinton. Doug, thank you for coming into studio today. Folks, it is just after 8 a.m. on the East Coast, and you're watching Squawk Box right here on CNBC. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin. Among our top stories this morning, it is day 3 of the government shutdown. The Senate is expected to vote again today on the same proposals that failed on both Tuesday and Wednesday. Senate Majority Leader John Thune says that after today, though, weekend votes are very unlikely if they do not pass something today. The Wall Street Journal reporting President Trump is considering a $10 to $14 billion aid package for farmers who are making soybeans in particular, using tariff revenue to fund it. The U.S. agriculture sector finds itself in the middle of the tariff dispute with China as Beijing holds off on buying soybeans. In fact, they've gone to zero. And a huge fire at a Chevron refinery in California late last night. The flames could be seen for miles. A Chevron spokesperson says all refinery personnel and contractors have been accounted for, and there are no injuries. No word yet on the cause. The facility can refine up to 290,000 barrels of crude oil a day, including gasoline, diesel, and jet fuel.
Let's take a look at the futures on this Jobs Friday without any jobs data to tell you about. The Dow up about 100 points right now. S&P 500 up about 10 points. The NASDAQ up about 40 points. Want to get more on the markets. Mike Santoli, I don't know if we're flying blind or not this morning. What are you looking at?
You know, to a degree, Andrew, it feels as if in the absence of big data, where there's often a focal point of volatility and movement around the macro story, what we get is, you know, the path of least resistance is just what the trend has been. And the trend has been essentially a slow grind higher. The rally has definitely taken a little bit of a downshift, but it's not stopped. We first bumped up against 6,700 on the S&P early last week. Haven't really gotten escape velocity off it, but every day it seems like just enough strength at the index level, just enough exuberance in the AI sector. a couple days, healthcare got off the mat. Last week it was energy. So it's rotating. It's trying to find a way. Obviously, at some point, it's going to have to get fundamental confirmation of all this. But right now, Fed rate cut in the bag. Market seems pretty confident about the underlying trend in the economy. Take a look here. It's also been a global rally, I point out. The EWY, that's the South Korea Index ETF. And this is the U.S. Semiconductor Index. This is 6 months. It's the same chart, right? So about 36% or so of the Korea market is Samsung and SK Hynix. We broadened out the AI trade to all the memory chip makers. The entire food chain is ripping higher. The question is there enough to go around? Well, every day there's 4 announcements about a partnership or a procurement deal, and OpenAI wants to seem like it's going to buy up all the scarce, capacity. So it does, for now, seem to be benefiting things across the globe. I do want to take a look at Tesla yesterday. Big beat on delivery numbers. You got an upside try on the stock, and then it reversed lower. Maybe it's going to firm up today. This is a 5-year chart. Want to keep an eye on a few areas where it's gone vertical, right? In the, sorry about that. It's gone vertical in these instances and then gotten up to the similar price level. So especially late 2021 and then December of last year when it went here and basically marked basically the culmination of a NASDAQ rally. You saw NASDAQ underperform from there. You did see at least a double-digit correction. It's not as overbought now as it was in those instances, but keep an eye on it as a little bit of a tell of the animal spirits and how stretched parts of the market might become.
Okay. Thank you, Mike.
Yep.
We'll keep our eyes on that.
And our next guest is working with military leadership to help defense tech startups compete directly for Department of Defense contracts. He's here on set. Kyle Bass, Heyman Capital Management, founder and CIO. I guess I'd ask you what you're doing in New York, but it'd be such high-level stuff that you probably just have to probably not answer, right? Plead the fifth.
I think you'd like what you're seeing when you have Defense Secretary Feinberg and Phidias bringing a private equity mindset to the Department of War. You're starting to see the new $200 billion that got allocated to DoD to push forward on critical minerals, on shipbuilding, on defense technology is now being driven and run by a private equity mindset of getting things done.
Do we call it DoD now?
What's that? They call it the Department of War.
So it's not DoD anymore. I guess we need a...
Well, Congress has not officially given it that name. So.
Oh, really? Well, just wait till... Fly over the Gulf of America and see whether that matters, okay?
I mean, it was the Department of War for 158 years.
That's crazy. People don't realize that, I don't think.
I mean, it only became Department of Defense in 1949. And where we sit today with ground wars in Europe, with Israel, Iran, and their illegitimate proxies. And
I know, look at you while he's explaining.
And now we're staring down the barrel of potential Taiwan conflict. We need to push ourselves into some wartime footing, especially on defense procurement. We have a Soviet-style system that rewards mediocrity, sloth, and cost overruns. It's like your interior decorator at home. Like their jobs to get your building.
Here's a wording question, if words matter, right?
Yeah.
I think part of the reason that the name was changed after World War II was this idea that the United States was now this beacon on a hill, a true beacon, and that we were trying to be, you may hate the word inclusive, but the idea was not that we were at war with the rest of the world, but that we were a leader, a moral leader, also a democratic leader, and that we were trying to...
That's no longer the case?
My question to you is whether the word of how you describe your Defense Department
matches that we're no longer a moral beacon for the world anymore.
No. Well,
okay.
I
just didn't know where you were going.
No, it's like, what are you trying to project? If you're trying to project, if you're trying to project we're at war with you, then you're trying to project.
But there are it's a dangerous place.
And then there's the internal projection. Maybe you want your people, meaning people who work for the military, to feel more like they're on war footing, and so you want to use the word for them. But what does that project outside? Right. I mean, there's lots of, words do matter, and I'm curious how you think about it.
Yeah, this guy's got to lose some weight.
Through all of the wars...
The generals.
All the generals? Yeah. All the generals have to lose weight,
obviously, yeah.
Well, I mean, look, the woke sensibilities and this and that in the Department of Defense or War, whatever you want to call it, they have no place in our war-fighting capacity, in my opinion, and I think that's the opinion of leadership.
I'm not suggesting that they do.
And so when we get now Department of War changed 1949 Department of Defense because we had just won World War II. And we wanted the world. No one wants war. President Trump hates war. Okay, so this is not a war-mongering situation, but when you look at where our adversaries are, how China, Russia, Iran, North Korea are all working together, and we don't have what we must have if we are to get in any kind of conflict whatsoever. We don't have any precision weapons. I'll give you an example. You know, the Tomahawk missiles that we fired at Iran from that Ohio-class submarine, we launched 30 missiles in one strike. Raytheon can only deliver 5 Tomahawks to the government per month. We shot half a year's worth of production in one roll. If we get into any kind of conflict...
Do we need allies too, though?
What's that?
Do we need to have stronger ties with our allies as well?
They need to pony up more, would say.
Yeah, again, the whole defense
idea,
spending.
if we're going against all of these, you know, this group of people, this group of countries that are working well together.
Yeah, look, the West has to reunite. Europe has the incentive to start moving into paying their fair share of NATO, trying to get to 2% of GDP. I mean, Germany just last year spent 1.5% on GDP. Right. There's been a ground war in Europe for 3 years. I mean, the Europeans are asleep. We have to get them to wake up.
We don't want Germany
we have to spend
crazy
more.
on
defense spending.
Kyle, what was your reaction to the president's speech and the Hegseth speech to the troops? And I'm curious how you think the rest of the world looked at that, like whether they watched that and said, my goodness, these people are serious people and we should be scared of this, or they thought something else.
I mean, if you...
Well, if this is something else, just say it.
Yeah, no, it's...
I mean, I think there were other people, if you read some of the newspapers in international lands, that were laughing. And so I'm curious, I'm curious as somebody who cares about that.
We don't want that.
You don't want people laughing, I don't think.
From newspapers in foreign lands, oh my God, no. I think we'd change everything.
I'm asking the man who's...
Look, I have a little bit of a perspective because I go to Paris all the time, right? And in Paris, the Trump derangement syndrome does reign free. That is how they think about America. I wear American flags wherever I go, and I wear them in Paris, and I get into these conversations. They believe that this is an anomaly and that we're going to go back to the kumbaya and that we're going to have the World Economic Forum, the world's going to settle down, we're not going to have more wars.
No red lines.
But what's happening if the people that have clearance that read classified briefings every day about what the Chinese are doing every single day to prepare for war, it is frightening. And what we have to have going forward is we have to change defense acquisition, which hopefully we're doing now. The Senate bill for the NDAA gets us in the right place. The House bill is being slow-rolled by the primes. The defense primes get 99% of the defense budget. 99%.
Kyle,
and defense innovation needs more. And America's good at this.
We need it, or maybe the left needs a new bogeyman for where we need to cut in terms of the budget. We cannot possibly, if you haven't learned anything in the last couple of years about defense spending, we need to do it smarter, obviously, but don't you think we need to continue to fund our defense?
I mean, look, 3%.
Because there's people that want to cut it in half.
3% is not enough. We're at 3% of GDP today. Right. If you look back through the Cold War, we averaged 5.5%, 6%. You look back to Vietnam, it was around 9%. In 1945, we spent 47% of GDP on defense. We went all in because we had to win. 3 is not enough right now. And I realize we have budget constraints everywhere. But what you're seeing Steve Feinberg do, Secretary Feinberg and his team, they know that if we're going to start spending into innovative companies in America, which I've been traveling America the last several months, I leave these places with goosebumps. You see these guys innovating at speed. We just need the acquisition system to start dealing with them. But what Feinberg and Colatides and his team are doing is bringing a private equity mindset to the Department of Defense, Department of War, and they're partnering with someone like us. They just greenlit us with $1 billion to go make these loans. We've made $300 million worth of loans last year, $1 billion this year. We'll make $1 billion going forward. And that kind of bringing public-private partnership to this new war footing is vital to building our stockpiles up so that we can deter. None of us want to go to war.
Okay, we'll leave it there. My commentary. Hey, I'm learning. It's Friday, too. Bye.
Kyle, thank you.
Thank you.
Great to see you.
Pleasure.
Still to come this morning, the CEO of Perplexity. The company has announced a partnership with video platform Rumble this morning. And later, Chicago Fed President Austin Goolsbee will join us. We've got Austin. We'll get his thoughts on jobs instead of an actual jobs report. Squawk Box. We'll be right back.
He sure knows these parts well.
Folks say the planes whisper to him.
Outlaws in 500 feet. Rerouting.
Making a left!
Innovation changes everything.
Man, he's good.
With one investment, you can access the NASDAQ 100 innovators who are rethinking the world. Before investing, carefully read and consider fund investment objectives, risks, charges, expenses, and more in prospectus at Invesco.com.
When I started Walton Goggins Goggle Glasses, I didn't know how to turn all this fancy prettiness into a classy-looking logo. But GoDaddy Aero does, with its magical AI powers. It not only creates it, it slaps that sweet thing everywhere.
You're up right now, still scrolling, still streaming. Stop. With AGZ, designed to support your body's natural sleep cycle. It's the nightly drink for winding down and resting up. Go to sleep.
At AT&T Business, we guarantee our best deals on any smartphone with your choice of our best plans. What we can't guarantee, your employees having a similar work style. You hired them, or your staff all having the same vibe. I like this style. And your design team being on the same page?
Bold choice.
For 2002.
What AT&T does guarantee are best deals on any smartphone with your choice of our best plans for any employee. And we mean any.
Taylor Swift just came off her record-breaking Eras tour.
What can she do to top it?
The pop superstar announcing a brand new album.
Literally everything she touches, people want to know about.
This Swift Effect, a new era. CNBC premiere episode. Tomorrow, 10 Eastern.
Hockey is here. The breakaways, here. The OV goals, here. The Stanley Cup, yeah, you guessed it. It's here on ESPN.
Welcome back to what should be a thrilling second half.
Welcome back to Squawk Box. This is an exciting one. Perplexity rolling out its AI browser Comet to all users this week. And joining us right now in an exclusive interview is Perplexity's founder and CEO, Alphafutures. It's great to see you. Congratulations on doing this. I'm sort of fascinated by what this really means. For those who don't know what Comet is, who haven't used it yet, I, by the way, have been playing with it a little bit now, trying to integrate it even into my calendar. We can discuss that in a second. What is happening here?
So Comet's not just a browser, it's meant to be a true personal assistant. And when you hire an assistant or anyone to join your team to help you do your tasks, one of the things you just take it for granted is their ability to use the internet, their ability to use search, web browsing, and all the tools that exist out there on the open web. That's not something you can take for granted with an AI, because the model is obviously giving it reasoning capabilities, but AI is clearly going to only deliver value as an end-to-end orchestrated system that knows how to use the browser, how to upload files, how to download them, how to pull context from relevant tools, and data that's only relevant to you and nobody else. So that's where AI is clearly headed next. It's not just about answering questions or being a sycophant chatbot that tells you good stuff you want to hear. It's truly about delivering value and you being able to delegate tasks to it.
So let's talk about some of those tasks, because obviously the biggest bottleneck, I think, in all of our lives at the moment, at least in mine, is dealing with both email and my calendar. And frankly, I wish this could also deal with text messages and Slack messages and WhatsApp and the various different messaging systems that are taking place. But coordinating all of that, you are effectively now setting it up so you can connect into these services and schedule stuff via AI, have emails written for you. How good do you think that that technology is right now, and what are the risks at the same time?
I think the technology is getting really good. In addition to Comet, we have a product called the Email Assistant. The main paradigm shift there is it's going to be working in the background. Most of the AIs are working in the foreground. You ask it something and it's responding synchronously to you on that chat window. The future is AIs that are just doing work for you even as you sleep without you even asking for it. It's auto-drafting your responses to emails that were sent while you were not even active on your device. It's scheduling your meetings on your behalf and moving things around even without you asking for it. And it's prioritizing your emails that are sent to you. That's the future. We're moving more towards asynchronous multitask abilities.
Right.
And that's why we're building something like Comet and background assistance there too. In terms of challenges, it's mainly the ability to pull context reliably, which is, the thing that's solved with all the progress in like frontier reasoning models. And security-wise, we are very clear that like none of the data is violating the SOC 2 compliance. So as a company, we are SOC 2 Type 2 compliant, and we just try to ensure that all the data is securely stored and logged.
Well, so that's what I was going to ask in terms of where the email ultimately gets stored and logged, where the calendar gets stored and logged, because for it to work, I would think the best, you would actually want to ingest all of the email. This is why I've always thought that someone like Google should have an advantage just about over everybody, because they have the email sitting on their servers right now to the extent that they want to allow their AIs to read them. How should we think about that?
You don't need all the emails to be stored in an index. In fact, like the magic of all these tools is they can pull whatever context is necessary on demand and ignore everything else. For example, if you're asking, prepare me for my day, I just need to pull the calendar events for that particular day and the emails that have been unread on the top of your inbox for the last day or two, but not your entire inbox history. And so that's just like a tool call to all these different tools. It's not necessarily like downloading them and indexing them.
But don't I want it? Look, here's the thing, and this is the complicated part. I would imagine ultimately, if you're going to rearrange my calendar for me on my behalf, you would want to know who was important to me, not based on the last 24 or 48 hours of emails, but maybe on the calendar and being able to look back even 2 or 3 years. Or maybe be able to look into emails from 7 years ago to get the context on what's going on with this person, how is this person important in my life or not, am I going to prioritize this person over the meeting that's currently scheduled right now? I mean, that's always been the hardest part about this dream that we all have, that AI will one day schedule us for us.
Yeah. I mean, that's essentially what Comet tries to solve, because it's having a higher bandwidth access to understanding you through not just your emails, but everything else you do on the computer, your browsing history. You're basically onboarding Comet with your browsing history, but all the history stays locally on your device, on your client. It doesn't actually get sent to the servers. But anytime you ask Comet to do something, it tries to understand you by pulling your browser history. So if something is important to you, it is usually revealed in other things you do as well, not just stuff that's on your emails.
You know, one of the things that's so interesting about the way Perplexity works is you are leveraging so many different models. So which models are you using for this component part of the email, calendar, Comet program at any one time, or is it multiple models?
It's, as always, multiple models. In fact, building something like Comet requires orchestration of several different models. One model that truly reasons, one model that pulls context, one model that synthesizes and processes them, another model for like computer use, like capabilities to actually go and control websites or tools. And we see the future as something where people don't, I mean, we've been saying this even in the era of just AIs answering questions, where no one even cares what models are being used for what purposes, as long as this end-to-end system does what the user really wants. I think it's even more true in the agentic world, where the workflows are even more complicated.
As the frontier models get better and better, you know, each time OpenAI releases a new model, sometimes the prompting shifts in terms of how you get the answer, what kind of answers you can get, what you need to do to sort of get things to work the way they're supposed to. I don't know how quickly you think each of these frontier models is going to get upgraded, and you then have to implement them into your own service. But what kind of challenge does that unto itself pose?
We definitely had a hard time adopting GPT-5, for example. We actually expected it to be a massive jump in capabilities, but for some reason, all the prompts that we had written for 4.1 never worked well for 5, and we spent several weeks trying to write a better prompt for 5, but we gave up and we just continue to use 4.1 for a majority of our workloads. They have since then improved some of their models, like GPT-5 Thinking is actually a pretty decent model, so definitely there are going to be challenges in adopting new models. Some other, for example, Anthropic tries to make sure there's good backward compatibility with the prompts that you've written for their previous generation of models. There's also the challenge of writing one prompt that can work across different model companies. For example, we've seen prompts that we write for Claude and GPTs work consistently well across both, but it doesn't actually work when we use models like Gemini.
Arvind, help us with, I'm curious just to take a 30,000-foot step back for just a second. There's a lot of questions right now in AI about whether we're in this sort of gold rush or whether we're in some kind of sugar rush. I think a lot of people even looked at the investment that NVIDIA made in OpenAI, both as a good investment on one end, and on another, people said, well, maybe this is a little bit like vendor financing in the late 90s, where a lot of these companies ultimately don't have the cash to actually buy all the chips and do all the things that they've committed to do. What do you think?
Well, it's all about whether you can truly deliver value. If something like Comet can help you get your work done, like you said, you're trying to use it for emails. If instead of hiring one more person on your team, you could just use Comet to supplement all the work that you're doing, and that's worth like $10,000 a year, like that. And if you scale it with a number of people who are like you, that's clearly adding value to the GDP. It's letting you do more work, like at the same unit of time. And I think the human value, conservatively estimated human digital knowledge work value contributions to GDP is around $25 trillion. So we just need to do like at least 20% more productivity for that. And that would automatically take care of all the CapEx that NVIDIA wants OpenAI to spend, which is $4 trillion for 10 gigawatts, right? So we just need to do 5 trillion, like bare minimum, like table stakes. And I think we can do that.
That's extraordinary. And finally, a question about copyright, because there's a brouhaha in Hollywood right now about what OpenAI has announced in terms of an opt-out kind of program. There are questions about how publishers are going to join your Comet Pro subscription. I want to understand how that works. How do you think long-term folks who have copyrights are going to be paid or not?
Yeah, so I'm pretty excited about Comet Plus. It's a program that we've put a lot of thought into as something like Apple News Plus that works in a world where both humans and AIs are going to consume content. As a company, we're not really interested in regurgitating existing content, like we're not training models on the tokens, but we want that content to surface in our answers. We want that content to be available to our agents that are going and doing deep research on behalf of the user. So not every bot is a faceless crawler bot. Like some bots are actually just doing work on behalf of the human, just like how you would have delegated an intern to do something for you. And that's why there needs to be one subscription plan. Just like how you buy one subscription plan for your company that your team also uses. It's similar to that, where you and your personal AI can use the same thing. And we have Washington Post, we have CNN, we have Condé Nast, several Fortunes, all of these joined, and we hope to expand the program to more people.
Okay. Arvind, love to see you hopefully in person at some point. Comet's fascinating. I do worry about, at some point we have to have a longer conversation about whether it can go off and do things without you knowing it, which is its own question. But we'll continue this conversation soon. Thanks.
Thank you so much for having me, Andrew. Thank you.
All right, when we come back, coming up at 8:30 a.m., not the September jobs report, but we have a very special guest who's going to give us a lot of information himself. Chicago Fed President Austin Goolsbee will be joining us. Squawk Box, we'll be right back.
Your daughter's turning 9 today, and your company's merger is turning on you. Time isn't on your side, but the team is. Specialists who know data, strategy, and finance.
Ben, what do you got for me?
Not what, it's who.
Hi, everyone. The dream team.
A team that knows you can't enjoy your daughter's big day, worried about your company's reputation. Deloitte. Together makes progress.
Connected world is crazy. Infrastructure without any structure. Hackers. Vendors on vendors on vendors. Workers everywhere. But Cloudflare takes care of the crazy, protecting workers, consolidating vendors, delivering AI apps, all on an intelligent global network that fights the crazy, so you can stay calm.
Rather than get rich quick, I believe in get rich slow. The high yield cash account at Public actually had higher rates than anything else I was able to find online. I don't want to be losing sleep over having made risky investments. I needed something stable that could really give me long-term financial benefits. I know my money's working hard for me, and I know I can access it anytime I need it.
Market conditions can test an investment. So at Federated Hermes, we put the stocks in our MDT portfolios through a ruthless vetting process because we want them to work, come rain or come shine.
Every great performance starts with a great night's sleep. Thanks to new Natrol Sleep and Restore, which helps me be this me. Every great night's sleep starts with Natrol.
New Natrol Sleep and Restore for your ultimate restorative sleep.
Instead of the jobs report, we have the next best thing, Fed Speak. Chicago Fed President Austin Goolsbee is going to join us next with Steve. Squawk Box will be right back.
In a world of conformity, it's often the innovative that stand out. At FlexJet, we've built a state-of-the-art operations control center with an international fleet of private jets and helicopters. Our Red Label crews are leading the way in pilot compensation, all supported by one of the world's largest maintenance networks. This is our timeless dedication to you. That's why we're outgrowing the competition 2-1. At FlexJet, you won't just be flown, you'll be moved.
I got her a little something. A little something, Dad?
Hold up. Walt rolled his 401k account into an Empower IRA and planned for times like this. I'm for Team Splurge. Thanks, Grandpa. Get good at money so you can be a little bad. Empower.
You buy low, sell high, jump on that trend, ride the wave. Stop. That's not how investing works. Wealth isn't won in a bet. Luck is not a strategy, and success demands discipline. You're serious about investing, right?
When cyber threats target the world's data, seconds matter. That's why the world's most trusted brands depend on ReliaQuest Gray Matter to contain threats in seconds. It's the only technology-independent, AI-driven platform built by security operators for security operators. ReliaQuest. Make security possible.
I stand alone with fire inside. This heart's a drum. I won't subside. Against the odds, I'll rise again with passion burning in my veins.
You founded your kayak company because you love the ocean, not spreadsheets. You need to hire.
I need Indeed.
Indeed you do. When you sponsor a job on Indeed, candidates can find it easier, so you can hire easier. Visit Indeed.com/
$3 or less. Only at Taco Bell.
All right, right, it's 8:30. No jobs report today, but we have something better. We want to bring in our Steve Leisman and Chicago Fed President Austin Goolsbee. Steve.
I don't know about me being better, but Austin certainly has the potential here. Austin, thanks for joining us. Austin Goolsbee, Chicago Fed President. Austin, it's 8:30, 3:30, 8:39, and we don't have the jobs report. I want to know how confident you feel right now that you know what's going on in the U.S. economy.
Well, I will say two things. One, it's the first Friday of the month. We're sitting here on the quietest jobs day. So something's wrong with the universe. We didn't get the final countdown walk-on music. And so the Chicago Fed, not because we knew there was going to be a government shutdown, we didn't, but because we've been trying to get better real-time measures of what's happening in the job market, we've recently rolled out the Chicago Fed labor market indicators, and one of those indicators, we turn to 11 different data sources. We take the official data plus high-quality private sector sources, and one of the numbers that we keep is a real-time estimate of what will be the unemployment rate. So barring getting an actual unemployment rate, we released yesterday that the unemployment rate would have been announced to be 4.3%. That is unchanged and stay where it is.
Austin, I looked at that data and your methodology there, and it looks a little bit like you're California sober on that, in the sense that you have not really forsworn the official data. A lot of it's based on the official data. So it seems like we're kind of cool in knowing
I totally agree.
Yeah, kind of cool in knowing what today might have been, but we don't know about, let's say, next week when we don't get jobless claims, although we are getting some state-level stuff. Goldman Sachs came out with a report this morning estimating that in the absence of two states, they think it would have been 224,000. But isn't it right, as time goes by, we lose contact with what we think is the reality? As time goes by, it will
get worse. There's no question the best jobs data in the world come from the Bureau of Labor Statistics. We need that data. We want that data. We can use what we have, which are private sector sources. We can look at the state unemployment claims and plug those into the formula. Over time, exactly as you say, Steve, it's going to get farther and farther from the truth. Even the private sector sources rely on the BLS data to kind of normalize and make their samples representative. But we fight with the army we have. At moments like this, where it's critically important that we're figuring out whether the economy's in a moment of transition, this is what we have. And thus far, it still continues to point to a pretty stable labor market, in my view.
So does that keep you on the trajectory you were on? I'm trying to think, and I don't love this metaphor because I don't even watch anything about planes and problems, but you know, you're at 36,000 feet, you're cruising at 562 miles an hour with some kind of tailwind, whatever you want to call it, and one of your screens goes out. Do you keep on the same trajectory, which right now the market believes is to cut interest rates?
Well, look, you know that Paul Volcker used to tell me, our job at the Fed is to act, and the market's job is to react, and let's not get the order mixed up. So what the market expects is not in the Fed's mandate. What should be in the decision of the Fed are the economic conditions, unemployment and inflation. That raises the degree of difficulty when we cover up one of the eyes or put a screen where you can't see the data. I think everyone on the FOMC has to come to their own determination of what does it mean for the trajectory. As you know, before we got into some of the dust in the air, I believe that the underlying economy rates can afford to come down over time in a gradual basis, a fair amount from where they are now. But this uptick of inflation that we've been seeing, coupled with the payroll jobs numbers deteriorating, have put the central bank in a bit of a sticky spot where you're getting deterioration of both sides of the mandate at the same time. If the inflation looks like it's going to be transitory, and I say that word with some fear, then I think the employment side of the mandate would be dominant. But with that, you see this uptick in inflation, and particularly the uptick in services inflation, which is probably not coming from tariffs. I'm a little wary about front-loading too many rate cuts and just counting on the inflation going away.
On Wednesday, Austin, we heard from ADP, and something with the overall revisions of the BLS was used as to sort of explain why it was such a big miss on ADP in the private sector payroll. Did you hear that? Can you explain it? Was it a big miss? Was it as bad as it looked, or was it just catching up with the revisions that the BLS numbers had already told us?
Yeah, and now we can't ask folks at the BLS because we got a government shutdown. I don't want to weigh in on the revisions, except to say the BLS is the best data in the world, period. And all data, private sector and public sector data, because people don't like answering surveys and the response rate is falling, we're going to get bigger revisions. There's going to be more noise in all the data series. So the fact that we're in a moment where on immigration and on labor force participation, we've got some question marks that we don't know, mean that people should be wary over-indexing on monthly aggregates, which includes BLS payroll numbers, it includes ADP. If you over-index on that as a measure of the business cycle, you could make a big mistake. We saw that in 2023 and 2024 when we were getting very big monthly job growth numbers, and it wasn't a sign that the economy was overheating. It wasn't a sign of massive growth rates. It was a sign that population was changing in a way that we didn't understand.
Do you have a dog analogy? You got it. You only got two. Is that the sum total of your? You just. How about this? Did you hear this one?
Data dogs. It's always the same analogy, but one of the key rules of the data dogs is sniff every piece of data that hits the kitchen floor because it might be food.
How about this? Have you heard this? If you want to run with the big dogs, you got to learn how to pee in the tall grass. You ever heard that one?
You the tall grass?
No, I'm not going to let you get me in trouble again, Joe.
That's a good one, isn't it? Think about that. You cannot,
lane.
if you're a little dog, you cannot.
Austin, I got a question for you. And here's another analogy that we get back to. We have heard the analogy that from Jay Powell that this could be like driving a car in the fog, and when that happens, you slow down and wait to see what's going on. What you just described sounds like you're driving in the fog in the car and not really clear about what's ahead. Does that mean you'd be inclined to slow down or stay the path?
I do think that if you got dust in the air, if you got fog, a lot of times you might slow down. And really the fundamental thing is we got to figure out the through line. You'd feel better driving in the fog if the road is straight, and you know that. Right. With these wrinkles coming from inflation, I think it behooves us, just as we said in the monetary policy framework, if both sides of the mandate are slowly deteriorating at the same time, we said we're going to look at how big the misses are on each side and how persistent we think they're going to be.
Can I want to interrupt here for a second, which is that Austin is pointing to something that maybe the market doesn't understand.
Yeah, what's that?
You're about to not get the inflation data too.
Right.
Right.
And the other thing I want to do is just...
It's not that both sides of the ledger
you're going to have
worse. You're not
fog on both sides. You don't know about the other. I want to make one political point if I could.
Oh, boy.
Which is this. Austin is also pointing out the following. The private sector has not, and I believe cannot step in to replace the massive measures that the government produces when it comes to the jobs report, trying to figure out the net monthly change in 160 million jobs in this country. And the private sector cannot and has not stepped in yet. There's other data out there, but Austin also pointed out almost all of it is re-benchmarked to the numbers that come from the government. Austin, I'm sorry to just take your time on that, but I want to make that point.
Look, that's
that
true.
At the end of the
I don't consider that a political statement. That's not a political. Those are just statements of fact that the longer we go without the official statistics, the more blind we're going to be of what's happening in the economy. And there are more private sector observations that we can get on the job market than there are on inflation. That makes me nervous. We don't get a lot of ADP equivalence estimates of the actual prices. There are a few, but not a lot.
Hey, Austin, I have maybe a 30,000-foot question. We were just talking to the CEO of Perplexity about AI, and we've been watching all of these transactions with, NVIDIA taking a stake in OpenAI, and there have been all of these questions about whether the folks who are effectively buying or committing to buy chips that will ultimately build all these data centers, which are powering so much of this economy right now, ultimately can afford to do it. How do you even think about that?
I mean, we think about it from the Fed on how does it affect employment or how does it affect prices? It could affect both, but that feels like a longer run version. If it's raising the productivity growth rate, and you saw him discussing that if they could raise productivity growth in services, that'd be a tremendous boon to the overall GDP, and I agree with that. In the short run, some of the most interest rate sensitive sectors include exactly the things like business fixed investment, where they're booming. They're not going down. You'd think if we were extra restrictive and you were nervous that was going to cause a recession, you'd look at it, interest rate sensitive sectors like the canary in the coal mine. But if you look at data centers, they're booming. We should think about what happens if the growth rate of AI is not as large as its biggest proponents think. Might we get over our skis a bit with overinvestment and have to clean up if there were a bubble? I think we do want to think about that topic.
Austin, thank you for joining us this morning, and we'll leave to later the discussion of a big dog, small dog, walking in tall grass or short grass. But we appreciate your joining us.
Sounds like you don't want to go out in Joe's dog's lawn.
No, I don't want to go there, and I didn't get back the time that he took to discuss that.
Take some more. So
no.
No, but you are so folksy. Have you ever copped to being born in Waco? Have you copped to that ever?
To being born in Waco? What does that mean?
Well,
you don't think I was born in Waco?
No, I do. Just, the whole, Chicago, I'm so highbrow. This is the whole, the big city, thing that you're pulling off now.
Austin's always been a man of the people.
You grew up in Whittier, too. I think.
Stick up for me, Becky. Where are you going with this, Joe? You think I'm a snob?
No, because you're very folksy. Like Dan, I said, Dan, right, that's why he's so folksy and relatable. And one of our favorites. Now that you're, can't say the things you really want to say.
I think he's doing pretty good.
He does,
what he wants,
but he never takes it down that horrible path he used to. Remember?
Try and drag him down?
Yeah, I still do. See you.
Good job, Austin.
See you, Austin. Thank you, sir. When we come back, we have assembled a jobless Friday panel to touch on the markets and the economy. We'll do that next. And Monday, first on CNBC interview with legendary trader Paul Tudor Jones. He's going to be with us amid all of the questions about what's happening with the markets, the economy, artificial intelligence, so much more. We're going to break down all of that and speak with him on Monday morning. You do not want to miss it. Squawk Box coming back after this.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
I hate my job.
AI is threatening my job.
It's crisis after crisis.
Take control of change. Stop the chaos and madness. Take control. Read James Patterson's Disrupt Everything and Win.
Searching for the perfect underwear? Tommy John combines innovation and excellence in every pair. Available in multi-packs, Tommy John's breathable second skin underwear is even softer than cotton, with up to 4 times the stretch of competing brands. We've also crafted indulgently soft second skin sleepwear for luxurious evenings and mornings. Invest Invest in your comfort worry-free. If you don't love your first purchase, we'll make it right. Because if you dress to the nines, your underwear should be a 10. Go to TommyJohn.com now for 20% off your first order.
Shimmering, that's the golden lady.
At the Farmer's Dog, our fresh food plans give dogs good health and great hair.
For adults with obesity, Zepbound means change.
It's changing what I believe is possible when it comes to weight loss.
Zepbound helps adults with obesity lose weight and keep it off.
Don't take if allergic to it, or if you or someone in your family had medullary thyroid cancer or multiple endocrine neoplasia syndrome type 2. Tell your doctor if you get a lump or swelling in your neck. Stop Zepbound and call your doctor if you have severe stomach pain or a serious allergic reaction. Severe side effects may include inflamed pancreas or gallbladder problems. Tell your doctor if you experience vision changes, depression, or suicidal thoughts before scheduled procedures with anesthesia. If you're nursing, pregnant, plan to be, or taking birth control pills. Taking Zepbound with a sulfonylurea or insulin may cause low blood sugar. Side effects include nausea, diarrhea, and vomiting, which can cause dehydration and worsen kidney problems.
Ask your healthcare provider about Zepbound. Explore savings options today.
Experience the power of CNBC Pro. Track your portfolio from every angle on one optimized platform. Never miss a moment with exclusive access to market-moving interviews and stock picks. Essential investing tools for wealth management. Plus, CNBC Global Market News and analysis tailored to your holdings. Become a smarter investor with the power of CNBC Pro. Go to cnbc.com/getpro now.
Now for what we can do, anyway, for a look at the state of the labor market without the payroll numbers, Allison Schrager is Senior Fellow at the Manhattan Institute, and former Biden Treasury official Natasha Sharon. She's a professor, and she's a professor at Yale, at the president of the Budget Lab, and Rick Santelli is here as well. I think we just decided, what is it, foggy or sandy, or what did were you guys listening to Austin? We're not
mentioned urine.
Yeah, no, I think, you want to call it urine? Okay.
Wow.
The Urine, the constellation Urine.
Better than Uranus.
Yeah, it is. Thank you. Thank you, Becky. Ladies, you just said something interesting, Natasha, and that is, so for every ADP that was down, what was the other one you talked about?
Revalio. So if you look at the private sector indicators that we got in the last couple of days, you saw that ADP says we're down about 32,000 jobs in the last month. Revalio says we're up about 60,000 jobs. Challenger data says that this is the worst labor market for September that we've seen in the last decade. Again, it's just none of these things are really meant to replicate what BLS provides, which is a look that is sort of sample weighted across the whole economy with respect to in lifetime what's happening with the labor market. And what we're learning from all of these other private sector sources is you really can't replace that with them.
So does that mean the default idea is that we're softening a little but not falling off a cliff? Is that where we are?
Yeah, I mean, I think as well, we're seeing this with JOLTS too, and we have that data, is we have a weakening labor market. But I think the question is it so bad it requires a Fed rate cut, or is what's wrong with it even demand-driven or more supply-driven anyway?
And Austin said something just now that I think is like incredibly important, which is this shutdown is massively disruptive for lots of reasons. One of the reasons is that we're not going to have access to data that the Federal Reserve needs to make those types of decisions. And I'm frankly, like him, less worried about not having access to the labor market data, though I am worried about that, but at least there are some private sector substitutes. But on the inflation side, in a couple of weeks, we're supposed to get a print that's really important, and there really are not private sector substitutes that can step in and fill that void. So you are kind of driving blind. And from their perspective, I think it's pretty challenging to figure out what to do, because you're not driving blind in an economy that's stable. It's one that's moving around quite a bit.
We did have some analysis about ADP and whether to interpret it or not, and a lot of people showed the correlation between ADP and BLS, and it's almost perfect if you wait a while But you just told us that's because ADP goes back and uses BLS data that they get later to revise their data so it matches the BLS.
Correct. I mean, their benchmark, they put out a first print, and the first print isn't all that correlated with the BLS numbers, and then they revise those numbers
based on BLS.
Based in part on BLS, and then so it's kind of an input into their model, and the result is the correlation goes up. So all that is to say, like, it is not, in fact, a substitute for jobs data. We need this data from the Bureau of Labor Statistics in order to make
the more they get from the BLS later, the more they're able to go back to the old numbers and get them closer to the BLS.
To be fair to ADP, they are very clear that they are not a substitute for what BLS provides. They're not even there. It's a private sector data source that only talks about private sector companies and looks at payrolls rather than doing a sample across the economy. So, like, they're not trying to be the BLS, and surprisingly, they're not the BLS.
And they're also not representative of the broader economy. Like, they have to make all these adjustments that they tend to have higher wage workers who tend to have
larger companies.
Yeah, which are a less volatile labor market.
Sorry, Rick. Sorry. I space out. What's going on? I forgot you weren't here. There you are.
That's all right. There I am. Listen, I think this is all interesting, and I really also enjoyed what Austin was talking about. But here's the problem, okay? That the world we live in is quantum computing, artificial intelligence, highly, highly sophisticated trading models with rooms full of servers and computers. And the Fed and all these investors have very low pixel data that they're trying to blow up real big to get a better, more accurate picture. Well, it's not HD, it's an analog low picture graphic, and zooming on it isn't going to do any good. So no matter how good our data is compared to the rest of the world, that's a relative value argument. It's never been spectacular. In my opinion, it's always been questionable, but it's kind of been enough. Well, in the times we live in, with so many things that are important at stake with what the Fed does, what central bankers around the world do, in the context of the kind of financial
Good morning.
we live in, budget deficits.
Looks like the bot's been short about 40 points now.
And if you look at the data,
Looks kind of choppy still, but
five-year charted jobs,
looks like it's oversold on 3 minutes, so it might bounce that
and
open.
even if it's not accurate, the trend is pretty
I'm
easy
so
to follow,
tired.
even though there's been dozens and dozens of revisions. And if you look at the unemployment rate on a 4-year chart, which I've loaded in, you can see that it's definitely turning up. So in a very general way, I think the Fed needs to pay attention here. But how do you square that with jobless claims, equity markets that are making new highs almost every day? It's not an easy job here. And then when you add in that we could have a second wave of the economy based on things in the big, beautiful bill, it's really quite complicated. And I'm not sure that the Fed ought to be moving much more than 20 miles an hour. It's not even a fog. It's a fog combined with high winds, and it's probably
Looks like the bounce is coming.
no moon.
All right, bald tires maybe. He says, I'm told that that's the end for us. I mean, not the end. At the end of this interview, Allison, thank you. Sasha, thanks for coming in.
Thanks for having me.
Rick, thank you. Squawk Box coming right back.
Are you investing in municipal bonds that will fund roads and bridges? Think of Assured Guaranty's bond insurance as your guardrail. Assured Guaranty, a stronger bond.
Welcome to the Now Way to Network. They switched to Juniper's AI native network. And now everyone's so productive, they're operating at a higher gear. That's the Now Way to Network at work, with real AI, putting you in the fast lane.
Asking the right question can greatly impact your
What's
future.
Go doing? Let me see. Go.
When it comes to your finances.
Are you a certified?
Oh wow, Go is almost all-time high again. Holy cow.
Acting in your best interest. That's why it's gotta be a CFP.
Good news. The market's swinging back to buyers.
Do we short Go or no?
Dream home won't be there forever.
Let's see what the
Let
bot
someone
has
else
on
beat
Go.
you to it.
Go
Start
is
your
short.
search today.
Ah,
Make it real with Realtor.com.
I gotta see if we can short Go or not.
Only the ServiceNow platform.
Kinda wanna
allows
short
AI
Go.
agents to work across your company. They deal with the small stuff that bogs you down.
Agents like secret agents?
You know,
Go is higher day.
Oh, I missed that one. I heard you were great.
I was great.
At IHG Hotels and Resorts, you can unplug for the day or plunge into a
Let me try to short Go.
savor the moment or savor the details. Earn points
Order
for free meals
filled.
with
Hello, I'm shorting Go.
great for him because he's going through this phase right now where he's very picky with eating.
It's hard to get my kids to eat veggies and superfoods.
So I did a little research and I found that Hiya has no added sugars and it gets delivered right to my door.
I have a lot of confidence in these Hiya vitamins knowing that there's 15 plus essential vitamins and minerals.
Nutrition should come from food, but with Hiya, it fills in those gaps. It just makes you know, like, okay, they got what they needed today.
Nope, you're not imagining it. The average grocery bill is now at its
highest point in over a decade. There's no sunny side to this. Egg prices.
Go all-time high is 39.22, so it's not that far from now.
Prices are up, but not at Metro. We've lowered prices, and you get a 5-year
No,
price
covering
guarantee.
that up.
One line
I
of
still had it
unlimited
shut
5G
down.
is now $40, period, and a free Samsung 5G phone. Go online or in-store to learn more. Only at Metro.
Breaking on Squawk Box this morning, the White House saying this morning that it is now putting a hold on $2.1 billion in funding for infrastructure projects in Chicago, including funding that had been earmarked for the city's transportation system.
I want to pump not all-time high, and then we can short.
Moments ago, his numbers show at this point the economy remains on a relatively stable trajectory. And Jefferies issuing a rare downgrade for Apple. The firm now has that stock at an underperform. And that's going to do it for us for today, for this week. And what a week of news it has been. And I imagine we will have more weeks of news as we get to record highs and all of these things.
What's your prediction?
For the markets?
No.
For the shutdown? Oh.
Well, I doubt they're going to get there today.
They'll do something this week. They'll start
This
talking.
weekend?
They'll start talking.
He said he's not going to do anything over the weekend, though.
But they got to.
Okay. Well, make sure you join us on Monday for that answer and more. Squawk on the Street begins right now.
Good Friday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer at Post 9 of the New York Stock Exchange. Favor as the morning off. Futures steady as we come off the 30th all-time high of the year. Stocks shrug off for now the government shutdown, which leaves us without a jobs number today and looks to continue into the weekend. Our roadmap begins with this AI-fueled rally, sending stocks to new highs. But Goldman's David Solomon has a warning about this rally. Apple with a rare downgrade today on concerns about excessive expectations for the iPhone. And as the shutdown enters day 3, the president looking to bail out farmers and the administration freezing more infrastructure projects, this time in Chicago. Let's begin with the markets, though, on a day which would have been Jobs Friday if not for the shutdown. There are some alternative measures. Jim Goolsbee this morning with the Chicago Fed's new tracker says we probably would have wound up around 4.3 unemployment.
Right. I know that we can use the Thursdays, and the Thursdays said we're okay. Look, I think that without the some sort of big raw number, the president is the missing factor here. So I think that he can't say what he would have said if there was a lower employment. I've spent most of the last 2 days trying to figure out AI and employment. And I do that because even when I look at David Solomon's comments, he did say he didn't directly relate it to AI, but we're starting to see it. We're starting to see companies say, you know what, apropos of the Walmart call that you gave, that there are people who are saying, wow, not what do we do, but we're doing it. And so it's no longer a work in progress. People are not hiring. And I think that that's really the call that we have to focus on.
We did mention yesterday some of the hiring intentions out of Challenger for September, worst September in over a decade. Greg Ipps got a great piece in the Journal today looking at why GDP and employment are separating so dramatically. They don't always go together, but it's rare they're this far apart.
Well, I just think that this is very different. This is the fourth industrial revolution that Jensen Huang keeps talking about, which he says at the beginning, you'll have people who are let go, but individuals have basically an assistant, and the assistant improves their productivity. So in the end, you will need more workers, because if you can improve productivity, then each worker is worth even more. I would say an outfit that's hurting would say, no, we're not going to do that. If each person is doing even more, we can lay off more people. So I think right now we're in the layoff stage.
Oh crap, I had to actually go. I had to get ready for the meeting.
It's just so new, and I really think that it's really time to give this whole labor issue to automatic data to paychecks. We need them, And those are the ones that we should be just